Trading psychology is overrated, but it is also the number one reason why you are not profitable. I've been trading for 10 years. I dealt with the exact same issues that you're dealing with. Revenge trading, trying to scale a small account into a large account, being emotionally attached to the capital at risk, trying to go from demo to live, thinking it's trading psychology, the fear, FOMO, forcing trades, risk management. This all stems from trading psychology. And I'm going to give you an action plan about how to fix this and why you're overcomplicating it. I'm going to go through every example and show you you're dealing with revenge trading. This is how you fix it. You suck at trading a live account. This is how you fix it. You want to scale. This is how you fix your mindset. Okay, because it is overrated. And if you don't make the adjustments, you are going to continue to lose. And so that's why I have this dedicated video to fix all your trading psychology problems. And in fact, if you think you're special and you think you have this mind-blowing different circumstance, let me know in the comments below of something that you're dealing with, and I'm going to explain to you how to fix it. Okay, so I expect a long list of trading psychology in the comments below. I appreciate if you guys like the video, subscribe. If you have any questions, you can always reach out to me on social media at MoneyballAustin. Let's get into this. The first thing I want to start off, because this has got to be a shoot from the hip type of video, you know, like you're coming to me with your problems. I got the solution to your problems. I talk to people every day that deal with revenge trading, and I say, no problem, this is what you do. They can't do it. What are you doing? Like, are you a moron? All right, so I'm going to yap a lot, but it's a yap that needs to be yapped. Because you know when you're talking to your friends and you just need to vent something that you're angry about or share your side of the story and you just need to yap? Okay, that's what I'm here to do, okay? But it's very good yapping. And the first thing that I want to do is I want to bring your attention to this trader right here. Because this guy, his trading psychology is out the window, and tell me if it sounds familiar.
Ever since I discovered day trading, my life has got worse.
What a great opening line to that video. Ever since I started day trading, my life has got worse. All right, so this is the video that we're going to watch. This is this guy started day trading. Guy's like 19 years old. So let's listen to what he has to say. And I know a lot of you guys can feel for what he's going through, emotionally trading, revenge trading, gambling, basically. This guy has a gambling problem. And then we're going to circle back about, you know, these issues and an action plan. But it's an important topic.
Say that with every fiber in my being. I have blown funded account after funded account after funded account after funded account. Like today, open and honest with you guys, to the 150 people that are following my channel or my TikTok, I have blown 4 funded accounts today. I have bought 4 funded accounts and blown them all.
This guy is just 100% gambling. No risk management, which is what we're going to talk about right here. Number one reason why people blow their accounts, they lose money. Risk management. There's actually no reason for you to lose money in trading, and I'll show you the stats on that. Let's continue.
I've been trading for about 2.5, almost 3 years. 2 years futures, roughly.
So that's pretty crazy. Let's skip on a little bit because I don't want to watch this whole 5-minute video for you guys. I have a little timestamp marked out.
Really bad. I make broken promises to people, promising them new cars, trips, vacations, certain dollar amounts I'm going to hit by this certain time.
This guy's hit rock bottom.
Clearing off my debts. I haven't done one of those things. I'm at rock bottom.
Oof, there it is.
I can say that with full certainty and full transparency. I'm definitely at rock bottom right now.
Which is a good thing. You know, hitting rock bottom is a blessing in disguise. It really is. It gives you that opportunity to finally change whatever you're trying to do in life. For some people, it might be trying to lose weight. It might be trying to quit drugs. Maybe something traumatic in life happens to you and you get into a car crash. Your whole mindset changes. Maybe you finally want to start losing weight because something happens to your health. You know what I mean? In this case, you know, it's trading. He's lost so many times. He's just caved in. He's sick and tired of it. This is the arc of where this guy will start becoming profitable down the line. You hit rock bottom. It's like a blessing in disguise because they say real change won't happen until you hit rock bottom. I believe the quote goes something like, change will only happen once the pain of staying the same outweighs the pain of change. Something like that. I don't know how the exact quote goes, but let's continue.
Like, I'm looking behind the screen right now because I'm in a trade and I full ported it.
Order filled.
There we go. I just fucking blow my account. I see everybody.
This guy opened up another account, recorded the video, full ported the account, and just blew the account live right there. That's crazy. Crazy.
I suck at backtesting. I cannot backtest to save my life. Every time I do, I just lose and I lose more confidence. I'm lost. I have no direction at all. I've never felt more low in my life. Yeah. And I know it's weird, and probably no one's gonna watch this full thing, but this is for me personally, I guess, but seeing some guy on the internet ranting about how he hates his friggin' day trading career or life, whatever the hell you want to call it, it's pathetic. It's pathetic. So, I don't know. This video's gonna get too long. I don't have enough money to pay for fucking extra storage, so on my phone, so I gotta cut it here, but.
This guy doesn't have enough money to pay for storage on his phone. I mean, like, this guy's got a gambling problem. This guy has a straight up gambling problem. There's like 10 seconds left, so let's listen to it.
Sorry, ranting. I know someone else out there feels the same way I do, because there's a saying that I live by, your life is someone else's dream life. And I know that someone else out there feels the exact same or worse, so hope this helps, I guess.
And I know that last line hit a lot of you guys. I know it. You know, he's not the only guy in the pits. 95% of traders are in this pit. But he's finally come to the realization that something needs to change, which is great. Congratulations on getting to this point. And he's probably going to watch this video. Realistically, I have a big enough reach that he's probably going to make a change in his trading. Maybe I drop him a message saying, hey, man, I reacted to your video. I just made a 30-minute long video talking about trading psychology. This is kind of how I break it down. It's a very large topic, but I really do believe that like a lot of these things are overrated and people just don't make the changes for certain reasons, which is really what stands out between the traders that make it and don't. So let me put this mic back on and then let's go through this slide that I have for you. So make sure I'm recording. Okay. Sorry for the background lights. It's I'm in a hotel, not the best lighting condition, but that's okay as long as you can see what's on the screen. That's all what matters. So let's talk about the common issues. Number one, revenge trading. This one I never get. It's the easiest fix. People come to me all the time saying, I struggle with revenge trading. I trade really well, but then once I lose a trade, I then take a second or third one and I lose those, and then I take a fourth and I lose that. So stop trading after a losing trade. And then they always hit me with the, oh, well, what if I see a really good trade setup on the second or third trade setup? It doesn't matter. You just told me you're a good trader, but you seem to revenge trade after one or two losing trades. So you need to stop trading after one or two trades. And if you can't implement this rule, you will never be a profitable trader. You need to get the source. You need to get to the source of the problem. And if this problem is occurring after a losing trade, you need to cut it off. It's like somebody coming to, let's just say they're coming to me because I'm like the greatest psychologist out there. Somebody comes to me and they're like, I'm trying to quit crack cocaine. It's like, okay, that's a good thing. You're trying to quit. So when do you typically do this, crack cocaine? Well, I typically like to do it when I go out with friends at night. Okay, so you need to stop hanging out with your friends at night. Oh, well, they're my good friends and I like to party. It doesn't matter. When you go out and hang out with your friends at night, you tend to do these things, right? You need to move to the opposite side of town. You need to get away from your dealer. These are all things that you need to put in place for yourself. Nobody's going to do it. Nobody's going to do it. Sure, there are things out there that will stop you from locking out your account. Honestly, if you actually need that, I think you actually have a problem. If that's just my opinion. Maybe it's just not an issue for me. But if you need something like that to stop you, if after a losing trade, or else you'll like max leverage your account, then I think that's kind of messed up. But I get it. I mean, I get it to the point of if you don't want to, if you get stuck into a losing trade and maybe your power goes out and then you can't connect to the phone lines or something like that. Like for me, if I'm traveling, that's actually a pretty good thing for me, not to stop me from trading, but it's more so to stop like the power goes out or the Wi-Fi goes out. I can't get a hold of my broker to close this trade. You know what I mean? And something like that happens. Okay, sure. But that's probably like nobody really here. But aside from that, if you're dealing with revenge trading, you need to cut the source off from the start. Okay, and if you notice a trend of you taking a losing trade and then you double down the risk or you start taking poor quality trade setups, you want that revenge, you want to get back in the market, then you need to stop trading after that losing trade. So that is revenge trading. If that did help for you guys struggling with revenge trading, I appreciate if you guys like this video. Let's move on to the next one. This is the big one. Scaling and an emotional attachment to money. This is something that everyone's probably going to deal with depending on your financial level, right? Because if you come, let's talk about this, because I got a trader that came to me the other week, about 2 or 3 weeks ago, having a hard time scaling their account, and they were emotionally attached to their money. They have no problem risking $100, but it's when they start risking $250, right? That's when they start sweating. That's when they start moving their stops up to break even or closing the trade because they start seeing that number go up. Now, to me, or to somebody else, that might not be a lot of money, right? But to him, depending on his financial situation in life, that could be potentially a lot of money, right? So for someone like me, like $100 isn't that much. But you go to a second or third world country, somebody trading $100, that's a lot. $500 a month is a monthly salary. So if you go off and risk $100, that's a lot of money, right? So for somebody like that, depending on their financial situation, they may have a hard time. Versus, let's just say me. I have no problem risking 100, 500, or 1,000, no problem. But then when I start hitting that $5,000, maybe $10,000 on an individual trade, I'll sweat that more because maybe with me living out here in Thailand or in Asia or in South America, that money can go a lot further, right? If I lose $5,000 on a trade, well, I'm like, man, gosh, that's like 3 months of living expenses out here, right? Like that's how I potentially look at it, which is understandable. I go, man, I just lost 2 trades in a row, $10,000. There goes 3 months, 5 months of me living. If I just didn't take those trades, I would be set for 3 months, no problem, right? And it grows with depending on your financial status. If you're a multimillionaire, you probably have no problem risking $10,000, but you start risking, like 100,000, 200,000 on a single trade, you're probably going to sweat that, right? So understand everybody has a different financial value depending on their lifestyle, okay? And now how would you scale? I would always tell people the exact same thing. Start very small and build from there. So if you can trade $100, no problem, great. I want you to stick at $100, but then I don't want you to jump to 200. I want you to jump to like 125 risk or 150. And then after 1 or 2 months or 3 months, you can scale up more as your account grows because you're also risking more, so your account will grow more, right? So then you can start risking 150, and then by the time 6 months have gone by, you can look back and say, look, I'm now risking 250 bucks. I'm over doubling my risk from what I was 6 months ago. And that's how you're going to scale your account and be okay with the financial, right? This is why a lot of people blow their accounts because they're trading these prop firms, and they're typically people who don't have a lot of money. And so that's why 9 out of 10 traders always fail those prop firm accounts, and then only if you get 10 people who pass those accounts, only 1 will ever take a payout. It's because typically those clients don't have any money. So when you put them in a position of potentially making thousands of dollars, they start seeing these numbers go up or down and they close trades early, right? Or they just max leverage full port and they walk away from their computer screen and they blow their account. So that's how you got to think about scaling and think about it as a long-term game and understand there is an attachment to the money. It's reality, man. We live in a life where we value money, as we should. We should. It's used to buy goods and services. It's used to elevate our lifestyle. And to double or triple your risk with a snap of a finger, very difficult. Nobody can really do that. It's very, very difficult unless you're already very financially well off. while not risking a lot of money. Okay, but that's how it scales. Start small, risk a little bit more and be comfortable with that for 1 to 2 months, and then risk a little bit more. Over the course of 6 months, you'll look back and say, wow, I've doubled my account for my risk. Okay, so that's how you do it, and everyone's attachment is going to be different, right? Somebody's net worth of being, say, $20,000 net worth, they're going to value a $1,000 account a lot more rather than somebody that has $1 million net worth, right? They don't really care about that $1,000, right? It's not as emotionally attached to them, but they might start freaking out or getting antsy around $50,000 or $100,000 at risk. You understand what I mean? So let's move on. Next, trade demo. Like I said, guys, this isn't going to be a video of me switching computer screen. This is a trading psychology video. This is what's going to help you. And if it's not, let me know in the comments below about how this is the worst trading psychology video, and explain to me why it's the worst, and explain to me your situation so I can prove to you it's the best. Common issues. I like hearing people's problems too, so I've heard every issue. I've heard it. I've heard it all. Trading demo, fine, but you lack the ability. Yeah, so this is the same thing. You've, as we just talked about, you trade demo, fine, and then you go to a live account and you struggle. It's the same thing. You go from a prop firm account that you pay $50 for example. It's all demo. It's all sim at the end of the day, but it's a made-up number knowing that you can start taking payouts. That's where it really starts screwing with you. And I think it really depends on your financial situation in life. And so early on, that's why I think a lot of people will struggle with that. But going to that live account, nothing changes, absolutely nothing. Sure, there's spreads and commissions when you hit a live account, but in reality, it's just a mindset thing. And I think what the best thing that you can do is drop your risk to the point where you don't care about the risk, the money that you lose, okay? Okay, let's talk about forcing trades due to lack of patience. And this one really hit home with me. Forcing trades due to lack of patience, or just forcing trades in general. So I think this stems from, why do we get into trading? We get into trading because we want to make a first or second stream of income. That's the reality of it, right? We need money, okay? So when we put ourselves in a position of, I want to be a trader, and you haven't taken a trade for 3 to 5 days or maybe 2 weeks, you start putting pressure on yourself of, well, if I want to be a trader, I have to take trades. It's the same thing. Well, if you want to lose weight, you got to go to the gym. You got to be eating right. You know what I mean? You're not going to lose weight by not eating right and not going to the gym, not doing exercise, right? And so trading is like the opposite, because you're going to think, well, if I want to be a trader, I have to take trades. And if there isn't a quality trade set up there, and you haven't taken a trade for a while, you start forcing trades. Because especially when you start seeing people on social media, you'll see nothing but winners on social media. Nothing but winners, people trying to sell you something, which is understandable. This is why you need to block it out. But you constantly see people in Discord groups, took this trade, took 10 trades today, 5 winners, 1 loss, running to the bank, lol. You know what I mean? That's what you see. So then you see all these traders having massive amounts of success, but then you haven't taken a trade for 3 days. And so then you start going, man, I need to take a trade. You take a trade, you force it, you lose, you get upset, you revenge trade, you blow the account, boom. It's a whole spiral effect. You see what I mean? And this is something that you can't be doing. You can't be forcing these trades because it's going to be blowing your account. There's obviously stuff that you can do. You can change up time frames, you can add more markets, but a lot of the time when traders come to me and they're like, and they're profitable, I always ask them, what was the thing that you changed in your trading that like finally clicked? And they said, less trades, and they switched to higher time frames. That's typically what a lot of the answer is. They focused on higher quality trade setups, taking less trades, and they switched to a higher time frame rather than a 1-minute time frame, which is like a gambling market for a lot of people. So that's typically why people will force trade. Let's talk about risk management. Okay, let's talk about the next one, risk management. This is completely overrated. It's so simple. Most people blow their account because of risk management. And I'll tell you this, if you have risk management and you're consistent with it, you will be a break-even trader. And I'm going to show you examples of this, and it's an exercise that I get traders to do, and it's an exercise that I'm going to get you to do actually in the first action plan that we're going to talk about, talking about a 50 trade back test and about understanding trading as a break-even game. You need to stop panicking, okay? Because trading is a 50-50 game. And this circles back to greed, fear, and all that type of stuff. It's very simple. I'm going to circle back on this, but there's no need to panic. If you're attached to the capital, you're risking too much, okay? Next, really quickly, because I want to get onto this action plan. Okay, let's continue on. Sorry about that. I was getting my room cleaned, and I got some coffee and some water. I had to pause the video. I don't know. I don't like shooting videos with the maid in my room. It's kind of awkward. Anyways, where are we? All right, how's the webcam? Everything looks good? Good. Black in the back, white up front. I like that. Okay, no. It's good lighting. That's what I meant to say. It's good lighting. Relax, okay? Oh gosh. It's good lighting, all right? You got to understand, like I travel around the world, the lighting's not always good from place to place. And so the lighting right now I'm cool with. And so that's why the background is always changing from video to video. I know some of you guys wonder, but it's not consistent with other YouTubers because I travel. I travel around the world, trade, that type of fun stuff. Anyways, let's continue before I dig myself into a bigger hole there. This is a big one, all right? And you won't be profitable until you at least accept this and change your mindset into what are realistic returns. And this brings me to my next point, expectations and comparing yourself to others on social media. You need to understand something. I have access to a lot more traders than you do. With the social media that I have, with my YouTube, with me trading for over 11 years, I can reach out to these traders that you guys might put on a pedestal or you guys that you watch. I can DM them. I have their numbers. I talk to some of them, right? And so I know the marketing behind what these guys are doing, what the returns are, what's realistic, and who's scamming. Okay, it's just not my industry of why I don't want to go off and make videos exposing people. It doesn't interest me. Okay, but what I can say, you need to change your expectations into what are returns. And it's one of the most commonly asked questions. What's your reward to risk? How many trades do you take a day? What's your returns per month? Okay, and you'll see on social media, and it will constantly be blowing up your trading if you start comparing yourself to other traders in other groups or on social media, because they're just going to be showing you winners. If you post a winning trade, you get like 3 times the amount of engagement than if you just post a losing trade. Okay, same thing with videos, and the more positive trades you put out there, the more money you make, right? And something else you need to understand, 9 out of 10 traders quit within 3 to 6 months of starting their trading career. So typically a lower end service running a Discord service teaching you how to trade for $90 a month, the churn rate is extremely high to when that trader will begin and quit because they realize trading is a lot more difficult than they thought. Maybe they think that the guy that they're learning from is a scam. Because I understand they're going out there talking about the $1 million lifestyle. You can do this thing too. You just follow my signals. You watch my live stream, take the trades. I have an 80% win rate with a 2-to-1 reward to risk, and I average 5 trade setups a day. The thing is, it's just not realistic. Okay, and I don't know any trader that can consistently perform and make returns like that. I've been trading for 11 years. I have access to a lot more traders than you guys do. I can't find a trader who can consistently produce 75% win rate with hitting a 2-to-1 reward to risk every single trade. It's just not doable. Okay, and so I think if you come to trading with the realization and expectations of making 1 to 5% per month, you should be extremely grateful and happy with that return. That's an exceptional return. You're averaging 50% returns after compounding interest, anywhere from 50 to over 100% returns. You're growing your account. That's insane. If you hear people doing more, they're risking a lot more. But I'm talking about if you just risk 0.5% to 1% per trade, you could be looking at, if you have the goal and the mindset of I'm happy with 1 to 5% per month, I would even say 5% is high, okay? Like say 2 to 3 or 2 to 4 and just be happy with that. dude, you're still knocking out 50% returns. That's insane. And if you can come to that mindset of slowly growing that and making returns, it just becomes a scaling thing. The problem is people constantly see themselves comparing themselves to other traders. This guy's nonstop posting winning trades. Why is it when I take a trade, I lose? You know what I mean? The thing is, you're just not seeing the whole picture. You're not seeing all the trades that people post. You're only seeing the winners. And so that's typically what people want to see. And it makes them feel good, whether that's just a random person posting a winning trade. They want to feel good, or they want to show it off to other people, right? But this is the reality. 95% of traders in this industry lose. 1%, I think the stat is 1% of traders make minimum wage. The odds against you to make it in this industry is extremely high. So if you can come to the expectations and actually accept, okay, I'm going to have to 1 to 4% returns month over month, and that be your goal, and focused on A quality trade setups, that's when you'll start producing consistent results with proper risk management. Okay, and so I could yap on about this, about the whole social media game and the churn rate of, you know, getting people into their Discord. You leave within 6 months or 3 months or 2 months or whatever, because you realize it's too difficult. They're not showing all their trades. You're typically filled with a bunch of degen traders that are just trying to flip accounts. It's just not profitable, and this is why people gamble their accounts and they never become profitable. Right? I said 1% of traders will make minimum wage in trading. And so you go to social media and everyone's a millionaire. Everyone. It's social media. Okay? I'm done. My blood pressure's raising right now. I need to move on to the next one. In fact, we got to get into this action plan because the lack of discipline, the knowledge is a big thing. And this is going to go into like why traders don't have an edge in market. And we're going to talk more about this. But they lack discipline. And if you don't have discipline outside of the charts, as in your life, then you're not going to be disciplined on the charts. This is why I don't have a lot of respect for like people, CEOs that are fat and overweight. It's like, what are you doing? You should take care of your health. Or people are giving their money to prop firms or brokers that are completely overseas, that are affiliated with their Discord membership that they own, but then you're teaching them how to trade, but then you're sending them off to lose their money to where you own the service. It's like, it's such a scummy industry. That's ranting off about something else. I want to talk about discipline and knowledge and confidence, because this is how you build a profitable edge. And this is what I want to start talking about now, because if you don't have discipline in your trading or outside of the charts, as in like your life in general, what you do on a day-to-day basis, you're probably not going to be disciplined in your trade setup. You're going to be constantly jumping from strategy to strategy, right? People often think like, oh, I'm a losing trader because prices just stop me out and then it reverses. So, or prices just missed my take profit and then it reverses. You know, if that was the case, then move your stop loss down a little bit more, or get out of your take profit a little bit less. The thing is, it's never the case. Where they think, oh, that's why I'm not a winning trader. Oh, that's the reason. I don't have this indicator. Oh my gosh, I've been drawing my zones wrong. That's the reason. It's probably a lot more reasons, okay? And confidence, how do you build confidence? Confidence is everything. Knowing that you have a trading edge. Your confidence changes when you know what you're doing works, when you have a trading edge, which is a lot of people lack. People think it's all about technicals. No, we come over here, we look at this, like technicals is just one thing. The technicals consist of your core strategy, indicators, price action, right? General chart patterns, okay? That's technicals. What about sentiment? What are other traders thinking? What about the COT reports? What's happening globally? What's moving the markets? Why is money moving into one market versus the other? Are the banks and institutions taking profit? Are they accumulating a large position, right? Fundamentals, what's happening fundamentally? You're telling me you want to go off and buy the US dollar when it's like one of the worst performing markets right now, when Donald Trump wants a weaker dollar. He's going out and telling you, I want a weak dollar. I want interest rates lower. That's not benefiting the dollar, right? Yet you're going out here swing longing the dollar, hoping for this dollar to go up. So what are you trying to do, right? And so this is why you need a combination of everything, and especially with personal edge. And this is why when I work with traders, we work on this. In order to be a profitable trader, in order to have an edge in the market, you need technicals, you need sentiment, you need fundamentals. And then building a personal edge of how you trade individually, because everyone's different, and we're going to talk about that. Let's continue. Oh my gosh, I'm getting into it, guys. I'm getting right into it. Let's talk about some notes first before we get into this action plan, because these are just important things that I want you to understand, because we talked about these issues now, all right? These are the common issues. This is how you fix them. And now I want to talk about how to fix them and why they're going to be fixed and how to actually do that, okay? Don't knock yourself down, okay? Don't think mistakes are bad. Mistakes are good. You're going to make mistakes. I continue to make mistakes. What's important is that you learn from these mistakes and that you implement something into your trading to stop yourself from making that mistake, right? Revenge trading, right? Cutting the sources off. Once you have a losing trade, you stop trading. Why? Well, because you're aware of, well, when I have a losing trade or two losing trades, I tend to take a third or fourth one that ends up being a loser, or I double down the risk. Okay, you need to stop trading after one or two losing trades. Okay, cut yourself off. If you're still not profitable, because after a month, you should have at least 20 good trades. To then you can say, look, I took 20 good trades. Do I have an edge in the market? Okay, an edge is just one thing, a higher chance of one thing happening over another, right? To think it's just purely technicals, your edge is very small. Okay, and you need to understand that. Next. Like I said, you will make trading mistakes. What's important is that you learn from them. Okay, don't stress about it. What's important is you learn. This guy that we talked about, this guy's blowing up accounts left, right, and center. Okay, he's gambling. He doesn't have proper risk management. He's got his back against the wall of he needs to make this work. I don't know if he has another source of income. That's something I would recommend is, yeah, go and get that job. Maybe switch to swing trading, right? Maybe that's a lot of traders that they do is they switch to a different position, style of trading that suits them better in their lifestyle. I see so many traders that like, okay, I can only trade Monday and Thursdays in the morning, but then Friday afternoon I can trade. Well, then you shouldn't be day trading. You can't be thinking you're going to come to the charts 2 days a week and only for an hour and a half and like seriously make a good living at this. Like you need to be there. If your lifestyle suits that you have the available time to look at a chart consistently during these times, then okay, it might be available for day trading. But if you don't have that ability, then you should be looking at swing trading because your lifestyle supports that life more and that style of trading more. You understand what very important what I just said there, guys? I am not exaggerating on this. Very, very important. Building your style of trading to what suits you, okay? I want to talk about this, haunted house, okay? And at what point is a trader profitable? Yeah, these are two concepts. And an example I want to talk to you about, let's get rid of this because we can now. Confidence. This is going back to confidence in your trading. And now the way that I would explain this is it's my haunted house analogy. And it's night and day difference when you see the ghost for yourself. And the example goes like this. Let's say you and I are at a hill. I don't know, at the bottom of the hill. There's me, this is you, okay? And then at the top of the hill, there is this giant, don't ridicule my drawing. Okay, this is our haunted house. We're gonna go H for haunted house. It looks like a hospital. Okay. Anyway, it's a haunted house. All right. I decide not to go into the haunted house because people have told me that the haunted house it has a ghost in it. I don't believe in ghosts. I haven't had a first-hand experience seeing ghosts, but enough people have told me that this haunted house is haunted with live ghosts that I'm not willing to go in there. I've never had a first-hand experience with ghosts, but enough people have came back and told me, yeah, there's actually ghosts. There's all these stories coming out. So I believe subconsciously that, yeah, there's a ghost in there. I don't know for sure, but I believe it because enough people. You don't believe in ghosts, so you decide to go into the haunted house. 5 minutes later, you come running out, right? You come running back out, and you meet up with me. And I go, what happened? What happened? You're huffing and puffing. You're like, oh, I saw a ghost, right? And you actually saw a ghost. Well, your mindset is completely different now because you went into that haunted house 5 minutes ago not believing in ghosts. 5 minutes later, because you had a first-hand experience with this, you now believe in ghosts. Your belief system is probably higher than my belief system just by that snap of a finger of your first-hand of experience. So this is why I understand why traders go through these mistakes. But what's important is that you learn from these mistakes, right? It's important that, this is why when I talk about my strategy, that you go off and see it for your own eyes. And this is why I do stuff with one-on-one and I review with traders and I go, look, time and time again, like, this is why it's so important to our core strategy, because there is statistically a big difference between our winners and losers when this occurs. When we have this on a trade setup, it's a 70% win rate versus if it doesn't. If it doesn't, it's a 40% win rate. So it's so important for us to have this in our trade setup. But you won't fully believe in that until you see it for your own eyes, until you do a 40 trade review. And then you realize, wow, man, that guy was right. Like, yeah, I noticed a difference between my winners and my losers. And I'm not saying it's that big of a difference, but it's until you have that first-hand of experience of you seeing it and you reviewing it for your own eyes, that then you will make the change and start implementing that. That's a big thing, in that you start having confidence in your trade setup. You build knowledge, experience, confidence, right? Knowing that you have an edge in the market versus you look at that and saying, look, that setup I like, but it doesn't have that. What I have is it's a negative edge. I'm going to lose money long term if I take that. So you know not to take that. Versus a newer trader, they take it because they think it's a setup. You understand? Anyways, let's continue. That was a big point. Action plan. We talked about it before. You need to put yourself in a position to succeed. I see so many, I'm not going to talk too much about this because we did talk about it. You need to put yourself in a position to succeed. And if you notice your problems, we're going to circle back on this idea, stemming from revenge trading or trying to scale up an account or seeing other traders have success, you need to remove yourself from that situation. It's a bad habit that you're in, and you need to find ways. If you have a problem looking at people's winners, stop watching YouTube, stop scrolling on your Discord, right? Stop looking at certain tabs where people are only posting winners, right? Because that's mainly what you're going to see. Put yourself in a position. You notice you trade really well when you move to swing trading, so start swing trading. You notice you trade these markets really well during these times, so focus on those two markets during those times. You like this type of trade setup, and you like this way of managing the trade, so you need to do this. You need to put yourself in a position to succeed. Put yourself in a position to make good habits, and put yourself in a position to remove the bad habits, okay? So this gets me to my number one. That's a very important thing I just said. Trading is nothing more than a break-even game. Action plan. This is it. This is the good stuff. I probably yapped a lot, but honestly, luckily there's editing, and I'll probably edit that down to like 20 minutes. Action plan. 50 trade backtest, and this is the first thing that I get traders to do now recently when they join the Moneyball trading program, because I need to rearrange their thinking. And the first thing that you need to understand is that trading is a break-even game, okay? If you go, I want you to do this, because when I do this, you go to TradingView, let's just go to a random market, like, sorry, let's just delete this. I kind of don't want to delete that. Let's just go to Nikki and remove. You go up here, backtesting, replay mode, and after replay mode, click on random bar. If you don't see random bar, then you got to click this little button, this little down arrow, and you'll see random bar. Click random bar, and what I want you to do is to do a 50 trade backtest, buying and selling randomly on a chart. And as soon as you're out of the position, I want you to flip it and then go for the exact same, right? So in this example, let's just go sell, stop loss, let's say $1,000, and then my take profit is going to be $1,000. You push play. You can speed up the candlesticks, so if it's going really slow, you can speed it up by hitting this little multiplier down here. And then, okay, I'm out of the position, I now buy. I push buy, I have my stop loss down here, take profit 1,000. All right, push play, and we lost that. I'm out, I want to go sell. And what you're going to notice after 50 trades is you're going to be a break-even trader. So this tells you that prices can only go up or down, right? Statistically, that's only what prices can do. Like, why would, I hate when people call me out on that and they're like, well, technically it can go sideways. Okay, it goes sideways. Then you're neutral in a position. If you take a buy or a sell and it doesn't do anything and it goes sideways, you're neutral. You don't win money or lose money, right? It can only go up or down. Like literally prices can go up or down, yet 95% of traders lose. It's because they have poor risk management. So what you need to understand is after that you take these 50 trades, okay, let's go like this. So we lost 3 in a row, which is kind of cool, to be honest. You can't freak out over 3 losing trades, 4 losing trades, because this is when people start strategy jumping. This is when people start hopping to a different strategy saying, this doesn't work for this reason. So I want you to go over here. I'm going to show you backtesting journaling review. And you're going to realize, here's an example of what it would look like. After 50 trades, you're just going to be buy, you get out, you flip it. You could buy 5 times in a row, flip it, then go sell. And this is what it is after 50 trades. Break even, I'm actually up $200. And so in this case, I was risking $100 per trade. I was up +2. I did the test again. Break even, strictly break even. $100 risk, 42 trades, break even. And this goes to show you that trading, at bottom line, you come to a chart over a long enough time span, you're going to be a break-even trader. It's almost impossible for you to lose money. This should take a lot of stress away from you. Okay, if you can truly accept this and go into every trade setup that you take, knowing not necessarily it's a 50-50, because obviously if you go for 2 to 1, you're going to have a lower win rate. Right? You're asking more from the markets. You want to go for 5 to 1? Okay, you're probably going to have to take 100 trades because you're asking for more returns, and so you need a larger sample size. So go for that if you want, right? But start off by doing 50 trade backtest 1 to 1. Okay, it should take you 20 minutes, and then try 2 to 1. You're probably going to have like a 30 or 40% win rate, whatever it would be, like 33. That's basically what I want to show you. Look, no matter what, as long as you control risk, you should be a break-even trader. Okay, and this is an exercise that I get traders to do now as soon as they join the Moneyball trading program, because it's going to show them you shouldn't be losing money. The reason why here 95% of traders lose when prices can only go up or down, it's because they have poor risk management. So if we can control risk, every single trade with the same amount per risk, with going for a standard 1 to 1, wherever, you should be at least a break-even trader. In order to be a profitable trader, you need to have an edge in the market. How do you define an edge? One thing happening over another. What do you need? You need technicals, you need sentiment, you need fundamentals, you need personal, right? These are things that you need to create an edge. No, you don't just, oh, we broke the London highs, liquidity sweep, sell. Like, no, there's a lot more context than to just 1 or 2 things. If you think it's that simple, then you're delusional, which I understand, maybe you're new. But what you need to understand is, you could obviously code that. You could code that into saying, once I have these 5 things, it automatically takes a trade. You'll have times that you perform well, and you have times that you'll perform bad. You'll be a break-even trader, or slowly losing because of spreads and commissions, right? This is why you need a personal edge. Market conditions are always changing, so it's important that you adapt to current market conditions, okay? But this is the first thing I need you to do. You need to accept that trading is at least a 50-50 game. Reach out to me on social media and let me know what your backtest results were. And this will let you accept and know, like, look, trading's a break-even game. Why am I freaking out over this losing trade? I should be okay with whatever risk I'm taking. I should be accepting it because I understand over the long term I'm going to be a break-even trader. You can't let these 5 trades, 10 trades, 20 trade sample size upset you, okay? You need an edge in the market. That's what you need. Let's move on to the next one. Creating a plan based on individual strengths and weaknesses. We talked about this, so I'm not going to continue to talk about this. But like I said, I'm not gonna really talk about this. Build strengths and weaknesses based off of you. All right, build a trading plan based off of your strengths and weaknesses. You revenge trade, your expectations, stop putting yourself into situations of talking to other traders. What is a trade setup? How do you classify a trade setup? How do you like to manage a trade? How do you, I don't know, I'm having a blank here. I'm going on, man. I'm cooking, as the generations say this, as the young generation say. I'm cooking right now. Honestly, I am. I'm freaking hot in this room. Anyways, let's continue. All right. Number 3, risk management. And this is what I need you to do. Risk management for 1 to 2 months in order to see if you have an edge in the market, right? This is why I say like 40 trades. Take 40 good trades with proper risk management. That should be enough to say, do you have an edge in the market? Okay. If you aren't profitable and you can come back and say, look, 90% of those trades that I took are good trades based off of my trading plan and what I deemed a good setup, 90%, and you had proper risk management, then something needs to change in your trading. You don't have a positive edge in your trading, which is very difficult. Okay. Yeah, trading's 50-50. We can accept that. All right, you start factoring spreads and commissions, okay, minus 5%, so you need at least a 55% win rate going for 1-to-1 at least to be a break-even trader. And then you start thinking, okay, are you really going to be happy with a 60% win rate, 1-to-1? Chances are, short term, you'll say, oh yeah, I'm cool with that. But you're not prepared to go 100 trades in order to generate 5% return. No, you're probably not, right? So this is why I say you need a bigger edge. Right? Technicals will probably get you there, but you start needing sentiment, technicals, personal edge, fundamentals. You need discretion as well to build that edge past a 60%, 65, maximum 70. You can go 75. You can go 75% win rate 1-to-1. You could do that. But you're not going to be getting trades every single day, which is fine, right? You got to ask yourself, are you okay with taking 1 or 2 trades? And that type of stuff, right? It's very difficult to do this by yourself and be honest, but these are conversations that you have to have, and you need to put yourself in a position to succeed. So as long as you have proper risk management and that you take the same trade setups, 90% of your trades are good, and you do this for 1 to 2 months, and you're up 1 to 5%, you should do the same thing again, right? Because you might have an edge, you controlled risk, and you performed profitably. So do it again. And don't panic if you have a bad month. The next month you only make 1%, you lose 1%. Because the next month you might make 5%. And then it's like, okay, well, the last 3 months I've made 9%. Okay, you're averaging 3.5% per month now. It's actually very profitable. The problem is scaling, right? And you need capital to scale, okay? Let's talk about the next thing. Books. I know a lot of people talking about what books do you recommend? Okay, 2 books. Number 1, Trading in the Zone and One Good Trade. Trading in the Zone is done by Mike Bellafiore, not by Mike Bell, it's traded by Mark Douglas. Trading in the Zone is written by Mark Douglas, RIP. Guy's a legend in this industry. He wrote a book talking about probability, and there's actually a YouTube series. If you type in YouTube Trading in the Zone Mark Douglas, you'll find the trading videos on him on YouTube, and he breaks down his book in the video presentation talking about, look, trading is nothing more than a probability. If you determine that you have a positive edge, why do you care if it's a winner or a loser? You're going to have a span of losers, and you're going to have a span of winners. So don't let individual trades or a small group of trades disrupt your large batch of trades that you're trying to get. Okay? Great book, Trading in the Zone, and the other one is One Good Trade. It's a book written by Mike Bellafiore. He owns SMB Capital, one of the biggest firms, and he wrote a book talking about focusing on one good trade, making sure that 99% of your trades that you take are good trades, not 50% of your trades are good, not 70% of your trades are good, you followed the plan, but like 100%, 99% of your trades are good trades, because a good trade is a positive expected value in your trades. Okay, you need expected value in a trade setup to be profitable long term. Okay, you take these trades, you'll be profitable long term. You'll have maybe a bad day, a bad week, maybe a bad month here or there. But long enough time, you let those compounds returns increase, you will perform very well as a trader. It just becomes a scaling factor. Don't believe anything that you see on social media, okay? Ooh, I'm cooking, right? And so, what's my last one, right? You need an edge, because I know a lot of people are gonna say, well, how do I create an edge? And like we talked about over here, and this is why I work with traders directly, I don't mind giving people a core strategy. I don't mind giving people like these books, right? Talking about my strategy or the top 5 mistakes, right? You need to have an edge, and an edge is more than just technicals. It's sentiment, it's fundamentals, it's building a personal edge. And this is why I work with everyone directly, one-on-one, when they join the Moneyball trading program. So like, I don't know who was the most recent one-on-one that I did. So Alan, we did our one-on-ones like a couple weeks ago. After a trader has 30 or 40 trade reviews, we come back and we do a one-on-one and we say, hey, what do you like about the strategy and what do you not like? And he says, well, I really like these markets. I don't like swing trading. I want to focus more on day trading. I want to do this, but the returns say otherwise. And so we come up with a trading strategy and a trading plan based off of what is working in the strategy, but also what he likes and doesn't like in trading. Okay, you're struggling with revenge trading. We need to implement this rule. You know, oh, you take really good trade setups, like in this case, 80% of his winning trades have this. Okay, we need to focus on making sure every trade setup has these things in common and removing the things that are costing us money. The problem, remember going back into that conversation, talking about the ghost, the haunted house? Do I still have that drawing? Yeah, remember the haunted house? You need to see it for your own eyes. Sometimes you need to touch the hot stove to realize it's hot. You know what I mean? You tell the kids, don't touch the hot stove. I'm sure your mom always said, don't touch the stove, it's hot. And then you would always go up to the stove and go, right? And you burn your hand. She says, I told you. And she looks like you're a moron, and you burn your fingers, right? Because you just have to experience it for yourself, right? And these mistakes, and this is why I say, don't worry about revenge trading or finding it difficult to scale, or in this case, you're gambling. Be aware of these mistakes and put yourself in a position to not make these mistakes, right? Review after your trades. Maybe this guy doesn't have a profitable edge, right? A lot of people just don't have a profitable edge in the market. They actually have really good risk management mindset, but they don't have an edge. And so they jump from strategy to strategy because their trading strategy doesn't have a positive expected value long term. So this is why it's really important to have a combination of all of them. And this is why you see a lot of people trapped on social media thinking, oh, look, you just take this very mechanical, one setup, very simple, right? There's a lot more to it, okay? And this is stuff that we talk about in the program when we work with this stuff about, yes, you can be profitable with this, but we need this to increase our edge as a trader. And here are the stats why. And once you take 40 trades, we're going to sit down and do a one-on-one. And I want to see your eyes and I want to see your experience with this so that you start having confidence. You have the knowledge, the confidence, the trust into the strategy, into what you want to do as a trader, because every trader is unique and too many traders are out here comparing themselves to other traders. Okay? And if you don't make these changes, you're going to continue to be a losing trader. Okay? So that's my whole spiel on trading psychology. I would really recommend you guys implementing this. If you would like to join the Moneyball trading program, where the whole goal is to take traders to consistently profitable in 90 days or less with a proven strategy, proven edge, and start working on your psychology and building a personal edge that fits you, right? Rather than being surrounded around 1,000 other individuals. It's a great fit. I would love to have you guys part of the team. I will leave the link down below in the description of this video. Thank you guys for watching this. You guys can always reach out to me on social media at Moneyball Austin. In fact, if you would like to watch my trading strategy in 30 minutes or less, it will be above my head right now. I will see you guys in the next one. Cheers. Bye-bye.